Pakistan is one of the least financially included markets in the world. So only 20% of our population has access to financial services. Nadeem Saab gave a brilliant presentation, very thought-provoking, had excellent examples from what the rest of the world is doing. My talk is mostly of a practitioner's view on what is possible in Pakistan and what some of the work that we have done and what are some of the opportunities that we see that are possible to change this dynamic in Pakistan. So that's, I'll spend probably the next 15 minutes or 20 minutes that I have to share this view with you. What do I point? Okay. So the three larger points that I wanted you to understand is that although we have about 40 million bank accounts in Pakistan, there are only about 20 million people who have access to a bank account at a formal financial institution in the country. Similarly, there's another problem that SMEs who generate 75% of employment in the urban sector have only access to about 8% of the private credit outstanding. The same applies to small farmers. 80% of Pakistan's farmers farm on less than 5 acres of land. So the engine of Pakistan's economy is being run by the small guy. People who are running small businesses and people who are farming on small pieces of land. And these people hardly have any access to financial services. So the fuel that runs a small enterprise, as all of you know better than me, is capital, and they don't have access to it. And then last but not the least, out of the 13 trillion rupees in deposits in Pakistan, almost 1/3 of it is in circulation. So this is money which is kept in cash and trading hands. This is one of the worst ratio globally. I think there are only a handful of countries who are below us. So this, we believe, is a solvable problem because of all the reasons that Nadeem Saab outlined in his presentation. I think the time for change has arrived in Pakistan. And a big reason for that is that there is a perfect storm of sorts that has come together, that has built those railroads on which this change is going to come, where financial services can be now distributed to the rest of the Pakistan in an economically sustainable way. And these are, you see this picture that shows, these are those railroads. So we have that entire infrastructure in place which is required to bring this change in Pakistan. So the onus is now on practitioners like myself and like all of you to leverage this infrastructure to build these solutions. So let's just quickly go through it. So we have, on the left-hand side, we have two strong regulators in State Bank of Pakistan and PTA. Pakistan is one of the very probably few countries in the world where every bank account and every mobile SIM is biometrically verified. Then we have the NADRA database of the entire, almost entire Pakistan's adult population that has an ID which is also biometrically verified. Then we have there are many developing countries in the world who don't have the basic infrastructure. They don't have payment switches, or they don't have credit bureaus. Pakistan has all of those things available. So we have payment gateways, payment switches, credit bureaus, all of this infrastructure is built, but what we are not building is scale on top of all of this infrastructure. So the irony is that a country of 200 million people, we have a branch distribution of financial services between all the banks, about 16,000 branches. We have 50,000 POS machines, and we have 14,000 ATMs. And now we have roughly 150,000 banking agents or branchless banking agents between the Easy Paisa and the Jazz Cash and UBL Omnis of the world. So this is the entire financial services distribution infrastructure available in Pakistan today. So if we try to leverage the brick and mortar model, we are looking at about more than 1 million people that can be served with a formal branch. So although we have the regulation in place, the branchless banking regulation has been around now for 10 years, that allows people to open a bank account, a digital bank account, without going to a branch. What we have not been able to do is to convert this into a full solution for the unbanked population of Pakistan. So what right now is happening for the last 10 years, that we are still using this service of mobile banking primarily for cash remittance. So money is being sent from one location through an agent in cash and then taken out at the next location again in cash. Because the use cases are not enough and the critical mass of users is not there where our market reaches an inflection point. So there are a few use cases surrounded by a cash economy and surrounded by a massive informal economy. So, but the opportunity is that the railroads are already laid down. We have on the right-hand side to the top that's where the real opportunity lies. That Pakistan has now close to 60 million people who are using mobile broadband on smartphones. Almost 40% of our phone users now have adopted smartphones, and projections are that in the next 3 years, this number is going to double. So we looked at all of this data, and we thought about how we can leverage this to develop a model and leverage. We have a banking license. We have this entire, railroads of disruption in place. What can a bank like a microfinance bank like Finca do to leverage this opportunity? So, but before I go into what we have done, I wanted to just share one slide with you to set the sort of conceptual framework of what we're trying to do. Because I think the most common question for practitioners like you and I ask that what exactly needs to be done and how can we do it, right? So in our small, humble effort that we have made and what I have understood is what I wanted to share with you. But I think the most important thing is that what we have experimented with, and I think to a certain degree gotten it right, is how we can go outside of our own bank and leverage the other talent that can solve a lot of problems that we cannot solve as efficiently. So the opportunity of joining hands with the fintech. So how this relationship needs to be structured and leveraged is at the heart of what banks need to think about, in my opinion. So, if you are thinking about transforming your business from an analog model to a digital model, in my view, there are 4 things that we need to look at. The first dimension is the dimension of your clients, your customers. So how do you engage your clients? How do you onboard them? How do you run the, I mean, depending on what industry you're in. So if you're a bank, and just such as in our case, so how do you run the KYC process? How do you run the AML requirements, etc.? If you can do all of this digitally, then you can really leverage that entire infrastructure that I shared with you, right? So that's one thing that that needs to be looked at. So the acquisition process and the profiling process and the onboarding process of your client. So in our case, we joined hands with a fintech Finja, and we built the first completely digital process of onboarding a client by opening their mobile wallet without having to go anyone to any physical location, either a branch or a mobile agent. So this is done through an API with Nadra, and a person downloads the app, answers a few questions, verifies 2 pieces of information which are not on their ID card. It is verified in real time, and the bank account opens immediately on their smartphone. Then the other part is that when we try to give people loan in our business, we are giving loans to those people who essentially have no history. So they have no record in credit bureaus. They have, a lot of them don't even have utility bills in their own name. So they're essentially invisible in the system. So we have to essentially come up with a hybrid model where we leverage technology with a human interface, and we onboard these people in a very efficient way. So what we have done is essentially we have converted our entire analog process into a digital process where our sales force of 1,200 people now uses tablets, and they open bank accounts and collect the credit application in the field without having the need for anyone to come to our branch. And we, from the application to disbursement of a loan, we have now cut down the process from, it used to be 5 days to now 24 hours. So this entire process has been, like Nadeem Saab was saying earlier, so think about how digital technology can help you improve your processes. So there's a lot of process engineering that we have spent a lot of time fixing these problems. So that's the customer dimension. And then once that loan is approved, it is now disbursed not into a traditional bank account, but into a mobile wallet. That mobile wallet is now, people can access it using a simple app. For those borrowers who are not literate, this app is in Urdu and also speaks to them if they cannot talk or if they can read at all. And it's a very visual application. And then once they have this app, they're connected to what we call the financial plumbing of Pakistan. So they're connected to all bank accounts in Pakistan through payment switch. They're connected to all mobile banking agents through a switch. They can pay their utility bills, they can do mobile top-ups, they can pay school fees of their children, they can buy bus tickets, they can buy even movie tickets or even airplane tickets if they wish to. So there's a whole ecosystem of digital economy and Pakistan's financial economy that they are connected with by doing this simple process. And lately we are in partnership with the fintech. We are innovating, and now there is a marketplace where they can actually buy things that are delivered to their home. There's a food delivery business through which the app is also connected, and they can order food, etc. So all of this is now available to any individual in Pakistan, regardless of their financial status and regardless of their education level. So that's one thing that we have done. The other thing to look at is that when we, especially bankers, when we look at these kind of opportunities, we tend to look at things in isolation, right? So we say that, okay, if this is a loan, that I just have to figure out a way to digitize the lending process, and then magically we would be able to approve people's loans using a digital process. But the fact is that you have to connect yourself to an ecosystem of the entire economy in the banking plumbing also, and the digital economy that I talked about. Because if you're not connected to it, people will have no incentive to use that mobile wallet that you have given to them. So the other important part is that you have to insert yourself into those ecosystems which are important to the users. That's the second important takeaway. The third one is that how you look at risk. So, and I'm preaching to the choir because there are many risk gurus in the audience here, is you have to develop digital scorecards and very efficient processes, be it your manual inspection process or your transaction monitoring, etc. They all have to be leveraged by using a digital process also. So in our case, we have converted this entire process of the risk and control mechanism into a digital process also. And last but not the least is, this scary word which is called IT systems, right? So us non-technology people, when we look at IT, we put all IT in like one box. And, a lot of time, anything related to IT, even if your presentation projector is not working, people are looking at their CTOs as if they can fix it, right? So this IT has now changed tremendously. And within IT now, we are talking about security, we are talking about infrastructure, and obviously we're talking about digital applications. So the technology stack of banks is actually outdated. And it is not really ready a lot of time to actually deliver this transformation. So you need the new breed of talent among your ranks who understands it. And then you also should really consider partnering with non-bank entities to leverage their technology stack and especially leverage their intellectual talent. So in our case, so I'll give you a simple example. So if you think about how there are two big mobile platforms in the world, iOS and Android. So what they did is they set themselves up as a platform, and they opened themselves up to the app developers all over the world and said, if you come and develop a solution that I will host on my platform, I will give bulk of the revenue to you, I won't keep it for myself. So the 60% of the revenue goes to the app developer, and only 40% is kept by the Googles and the Apples of the world. So what they've done is they have crowdsourced their innovation. So the innovation burden has gone out of two large companies now to the brilliant talent spread all over the world. So similarly, we need to think about, is there a way that financial institutions can also set themselves as platforms and then keep the regulatory burden of compliance and risk monitoring, et cetera, on themselves, but take the innovation burden outside of the boundaries of their own organizations. Let it be developed outside, and then bring it inside to test it, right? So you ring fence the risk, and then iterate over and over again until you get it right? So this is essentially how we have constructed a partnership with a fintech, and we introduced a mobile wallet called SimSim. So SimSim has now close to 500,000 users, which predominantly we are using for two purposes. One is anyone who wants to open a mobile wallet to be connected to the entire financial ecosystem of Pakistan and use it for payments. All payments are free, there are no charges. We have even made interbank fund transfer free on this app. So we believe that this, the margins that are being charged by banks are unfair and irrational, and I strongly support that the power of moving your funds and controlling your funds should rest with the consumer, not with the banks. So banks right now, what they try to do is to create artificial barriers so that you cannot move money from their account. You know, a great example that I want to share with you, Pakistan is probably one of the few countries in the world where there is no pull transaction available to the consumer, so you can pull money from another account. So if you have account in 2 or 3 different banks, and you log on to one account from one bank, you cannot pull money from any of the other accounts. You are asked to go log on to the other account and push money into the account where you want your funds to move. Now, if there is one reason why Alipay has been able to scale in China is because there is a pull transaction available. Those of you who have worked or lived in other countries like the US, etc., ACH payments or direct debit payments are very, very common. The question is why they are not allowed in Pakistan? Because the switches are owned by the largest banks and they want to create barriers in giving control to the consumer. But the good news is that change is coming, and this is now inevitable that this will not be possible for very long in Pakistan also. So the thought process that needs to change among all of us is not trying to create barriers, rather than adopt change and think about how we can champion the cause of the user if we want to succeed. Right? So you have to disrupt yourself before somebody else will come and essentially do it anyways. So I know I'm almost out of time, but the one thing that I wanted to share with you is, so we took this model which we were using essentially on the microfinance business side. We were saying, okay, how can we go out and do a risk analysis of a small borrower living in slums or living in a small village in Pakistan and give them a loan in the most efficient way at a reasonable, affordable rate. That's one part of the business. We said, how can we now position ourselves to serve the SMEs also of Pakistan, which is another big problem that needs to be solved. And what we understood, that when we look at SMEs, an SME or any business at a very elementary level is trying to do 2 essential things. They're either making payments, disbursing cash or disbursing payments, or they're collecting funds from somebody, right? So what we understood, that unless and until you have a view or you become a conduit for these 2 transactions, you don't have a view of what is going on in terms of the cash flow of that institution. And the problem is the majority of these SMEs are undocumented. This needs 2 minutes. Because the majority of these SMEs are undocumented, unless you have a view of their cash flow, you can't really lend to them or you can't really offer them anything else. So what we came up with is essentially what you can think of as a Trojan horse. Right? So this Trojan horse is that, how about if I develop an HRMS application which is cloud hosted, which is given for free to the SMEs, because majority of them don't have a human resource management system. They don't have a payroll application to manage their employee database and to disperse cash digitally. And if you go and also you give a free mobile wallet to all of their employees, because the long tail of low income earners in Pakistan don't have bank accounts. Banks want to open the bank accounts for the top 10% of the employee population. For the rest, they send a cash van that, oh, just distribute cash for them, because we don't really have time to open a full service bank account for them. So we said, okay, give everyone a free mobile wallet, give everyone a smartphone, and then give the SME a portal where they can make all of their disbursement and collect disbursement electronically from those people that they transact with. Right? So you give them a digital access to RTGS, which is the retail payment settlement system for large payments, or IBFT for smaller payments, which is interbank fund transfer. Make that free for them also, and then give it all for free to the SME, then say, go use it. Because once they start using it, the real value comes in getting access to that data And once you have access to data, you can actually lend to them. So this is an experiment that we are very excited about. It has scaled to a reasonable level. We have now close to 20,000 people whose salaries we are processing, and about 200 SMEs that have already signed up for this. We think that this is an idea that has wings, that can scale. And I'm very happy to share with all of you, all of the banks and anyone else, because the size of the opportunity is so large that I don't think one bank can solve it. So, so with that, I know I'm out of time. I wanted to thank all of you for your time. I hope that the small experimentation and efforts that we have made would jog some ideas in your minds also. Thank you very much.